Hi, my name is Sam Chowdhury. I'm a real estate broker in the state of Texas. I'm talking to a lot of clients which have big concerns. Sam, the interest rate have passed 5.5%. 30-year interest rate has passed more than 5.5%. What is the major reason behind that is because the Federal Reserve literally stopped buying mortgage securities or mortgage back paper or securities, which kept the mortgage rates artificially down. I'm not going to try to get into too much of it, try not to make it complicated. So what are the solution when the interest rate for the mortgage interest rate, when they start going more than 5.375, 5.5, 5.75, that is getting like every quarter of a point adds approximately another $3,000 per year burden on the family. So what to do at that time? Now, my recommendation to my client is, well, let's take a look at any other products which are out there. There's a product called 7 1 year arm or 7 year arm. What does that mean? That rate, the rate they're going to give you is going to be basically stay at the same rate for 7 years or so, and after the 7 years, the rate will become adjustable. So what do you do at that time? Well, average people stay in the house is 5 to 7 years or so. My recommendation to them, hey, how long are you going to be there, right? If it's going to be your first home, usually whenever people buy their first home, the average time they move from that first home is 3 to 5 years or so. And Houston being a transient city, a lot of people actually do not exceed more than 6 years in a house before they buy a bigger house or they move out or go somewhere else. So my recommendation to them is like, hey, get a 7 year arm. Why? The rates on 7 year arm is almost 1% less than the 30-year arm. They're even better than 15-year arms. So that is actually one of the best solutions I recommend people when they are shopping for the rates. But remember this one thing, a lot of people fall for those rate gimmicks. Interest rate is not the only determining factor. You also have to pay attention to how much the lender who's underwriting this loan is going to be charging. Most of the time, interest rate is only relevant so much. Closing cost, origination fees, processing fees, underwriting fees, all those garbage fees when these lenders add, you got to watch out for that. If you have any question, don't hesitate to reach out. My name is Sam, and my phone number is 832-419-4700. Talk to you then.